Okay, now we should be live. Do you see live on your end?
Yes.
Perfect. Well, welcome everyone who is joining. Today, I'm excited to have with me Martin Snow, who is the VP and Chief Delivery Officer at Atidot. You're going to have to correct me if I say that wrong.
That's okay. It's Atidot, but we accept the
Atidot is
American pronunciation.
yeah, exactly. Very American. At Atidot. And he's done some work in predictive analytics, so I thought he'd be a great guest to have on since that's kind of a hot topic in the actuarial space. So we met on LinkedIn, and I thought he'd be a great guest. So we'll kind of dive on in. So thanks for joining, Martin.
No, thanks, Paul, for having me. Would it make sense for me to start with a little bit of an intro about myself?
That would be great. That was going to be my first thing. So go right ahead.
Okay, thank you, Paul. So I've been in the actuarial profession for 30 plus years. I had leading actuarial roles at MetLife, TIAA, and Prudential. I was the dividend actuary at MetLife, the appointed actuary at TIAA, and the lead pricing and reinsurance solutions and NGE actuary for life insurance at Pru. About a couple of years ago, actually a bit more than a couple of years ago, my daughter was spending her gap year in Israel, and my wife and I went to visit her. And friends of friends introduced me and the CEO of Atidot. And shortly thereafter, I became a member of the advisory board. And now I am the chief delivery officer of Atidot. And like you mentioned a few minutes ago, Paul, what Atidot is doing is we're providing predictive analytics solutions for the life insurance industry. And that obviously includes annuity riders, primarily through the sale of software solutions.
Awesome. So to kind of back up then, did you in your earlier life were you always good at math, or like whenabouts did you hear about actuarial?
So I actually heard about actuarial pretty young. My grandfather was a life insurance agent, so maybe not an actuary, but at least I
Okay.
knew about
Yeah.
the actuarial profession. And I have some relatives who had become actuaries, but I was a math major in college, and I do have a master's from NYU's Courant Institute in financial mathematics.
Awesome. So you kind of knew about it from your dad a little bit then, since he was an agent in life insurance,
Yeah, my
or had
grandpa
heard
was
of
an
it.
agent, so right, I
Yeah.
knew about it that way.
Okay. Awesome. And did like your first actuarial job then was at MetLife, is that right?
Yes, well, to be complete, I was a summer intern at the Equitable, where I had some very good experiences. And then my first job was at MetLife, where I did a lot of exciting work.
Awesome. And at the time, did they have a study program at MetLife? Were you going through the exams there, or had you started taking exams before that point?
Right. So I had two exams before. In those days, there were 10 exams in total. And, some of them as long as 5 hours and some of them as short as 3 hours. And I had two exams when I started. And then over my first 4 years at MetLife, I passed the exams.
Okay, yeah. And I've talked to people in various different industries, and some people, will say like they don't get much study time. Some people say they get a lot, and it kind of depends if you're in consulting or not. Did you find that in life insurance, just because I haven't talked to very many people in life insurance, uh, what was the study program pretty good?
Yeah, my perception was that MetLife had an excellent study program. That doesn't mean it was a sufficient amount of time just to study on their study time to pass the exam,
Right.
but by
Yeah.
putting in enough time on my own, together with the study time that the company gave, which, benefited both us as actuarial students and benefited the company because it was training the next generation of actuaries. I certainly found it was very good. It was a very supportive actuarial community. There are people that I met then that I still am in touch with. I see them at SOA meetings or at other events. And it was a very, very good group, very, very good training that I got at MetLife.
That's great. It really helps to kind of have that, that support structure. I mean, I think everyone has to study obviously outside of work, but it's good to have that.
Yeah, no. It
And
was excellent, and they were very, very flexible. So when I was studying, some people like to take 2 hours a day. I just preferred why deal with the commute, and I would just take one day a week off to study. And they were very flexible and encouraging about it.
that's a great way to do it. That is really nice. I every once in a while I would do that where I'd take a full day and it's just so productive instead of like little bits here and there.
Yep.
So you, how long did it take you from zero? I always ask different people this because it varies for everyone. But how long did it take you from nothing to getting your FSA then, or you're an FSA? Is that correct?
Yes. I'm an FSA.
Yeah.
So from the time I started at MetLife, when I had 2 exams, I went to the 10 exams in 4 years. From
Wow.
zero, I
You're
had taken a couple of exams in college before that.
okay.
So I don't remember exactly where I was in college when I took those 2 exams.
Good for you. You're one of the faster people that I've talked to, so that's impressive.
Okay, thank you. Thank you. Everybody
Yeah,
does it at their own pace.
yeah,
So
that's right.
it was just it was a very productive. I mean, I still remember the manager of the student program was a gentleman named Bob White, and he really ran the program very, very efficiently. We got textbooks, we got everything we needed was taken care of for us. So it really was a very, very good program.
That's really nice. And so like, I'm just curious how you got into life insurance in the first place after graduating from college or after getting your master's. Most people, including myself, kind of took the first actuarial job that they got into, and that's the field they stayed in. Was there something about life insurance that attracted you to that, or was it more, this is kind of my first actuarial job?
Well, that's an interesting question. When I interviewed, I had gotten a few offers, and for various reasons, I decided to go to MetLife. And MetLife at that time had a lot of and they still do, a lot of very, very interesting areas to get into. There was life, there was pensions, there was group insurance, there were work to do in the corporate areas, and there was a need for someone to be the dividend actuary, which, the dividends at mutual insurance companies are way more complex than, let's say, what we're used to hearing some company declares a stock dividend of $1 a
Yes.
share. They wanted someone who both could handle the technical intricacies of the dividends, but they also wanted somebody who could work well with technology people, with marketing people, and they also wanted someone who could present well to senior management to make sure, things were understood, and who could
Okay.
control it well to make sure that there aren't a lot of errors. And so I fit the bill, was asked to take the job, and then um, that was in life insurance, obviously. And then what happened after that, TIAA had a need for someone to be responsible for all the life insurance work, actuarial speaking. So I took that role, and I was TIAA's life insurance actuary.
Wow. Okay. So you really like your first role, you got experience doing not just the actuarial side, but you really got a lot of experience with communicating and, maybe a little bit of the marketing side of things. So that's pretty awesome.
Yeah, and what I'll add that in addition to the work experience, requiring communications and working with marketing, working with technology people. And
Yeah.
maybe they still do it. I just don't know. But at that time, MetLife was very, very good about offering presentation training for actuaries. So I actually went to a class where I was videotaped and got like a full day, maybe even a day and a half, I don't remember now, of training and how you're supposed to present and
Oh, good for
communicate.
you.
Yeah,
I
no,
mean,
no. Well, it was good
that's
for the
important.
company. It was very good
Yeah.
training they gave us.
That is really nice training. They honestly should do that for all actuaries because I feel like it's I mean I think it's people are becoming more and more aware of it, but at least before I knew what an actuary was, I thought a lot of it was just the crunching of numbers, which that is a component of it, but there's so much more to it with being able to present. And obviously, you're a good speaker, so I mean, it's worked out well for you. But I think that's a good, actually, almost more important skill to have is being able to communicate.
No, no, no. I appreciate you saying that, and I agree with you completely. And I don't want to jump ahead if you have a specific flow, but this like gets to you may know that I had run for the board of the SOA. And
Yes.
the reason I'm bringing it up right now is because one of the
Oh, that's
things
fine.
that, I'm sorry.
Oh, that's fine. Jump right in.
Yeah, one of the things that I'd like to do, and I haven't yet decided what I'll do this year, but one of the things that I would like to do, and one of the reasons I was running, is because I'd like to strengthen the profession and communication, like you're talking about. People are becoming more and more aware, but to help, make it that actuaries are yes, very strong technicians, but also very strong at communicating and at strategy so that senior managements should
Yes.
once again view us as the leaders that we traditionally have been and that we can be again. And this is not to say, I mean, obviously, there are certain actuaries in very, very senior roles at companies, but at least what it seems to me is that 20, 30 years ago, it may have been a bit more of a norm for that to be. And I think that if we as a profession focused a bit more on communication, strategy, and those types of softer skills, it might become the norm again.
No, I completely agree with you. I think that would be an awesome component to add and to really stress. So, I mean, you got my vote. So,
Okay, thank
uh,
you. Thank you.
yes. So for those watching, can you explain what's involved with running for the SOA board and why why we should vote for you and why you would be a good member on the board?
Oh, no,
In
no,
the
Lisa,
future for
thank
when
you for
you
asking.
if you run again. Yeah.
Yeah, what's involved is that those who are interested in running need to, the SOA has a nominating committee, and those who are interested in running need to apply to this nominating committee and fill out certain material, explaining why they want to run, what they'll accomplish, answering certain questions about, their work experience. I'm not giving an exhaustive list, but just giving a little bit of a
Sure. Yeah.
flavor.
Yeah.
And then the nominating committee selects a certain number of the people who submitted apps to run. And in some years, all the positions on the board are open, and other, which means that you have 10 candidates, anyone could fill the 5 slots, let's say. In other years, they might reserve a position for an international candidate or something like that. And if you're not nominated by the nominating committee, there's actually a petition process by which you could get nominated. And my recollection is that last year, I was one of the two. Two of us who wanted to run for the board were actually nominated by petition to run for the
Okay.
board. And there
Interesting.
actually was a presidential candidate who was nominated by petition also. But in terms of the second thing you asked about what I would try to accomplish, one is to make senior management value and appreciate the skills that actuaries bring. And, excuse me, part of doing that would be to improve and enhance the communication skills, training, and the other soft skills that we
Yes.
as a profession have and get. The other things, it's very important to me, cooperation and working together with the other actuarial organizations, whether it's the Casualty Society, the Academy. It's, each of us has a specific purpose to serve, and we should serve it. But when we go out to the general public, it's hard for them sometimes, and depending on the forum, to actually say that, oh, we understand that SOA does this, Academy does this, Casualty Group does that. So it would be helpful where it's feasible for all of us to come together and present a unified front
Yes.
to the non-actuarial world.
Definitely. That's a great summary, and I think like you have a very good background. I'm sure, like you said, the board looks at work experience and all sorts of things like that. And you worked at several different companies, and we'll get into Atidot in a second here. But working for a startup like that, I'm sure brings some value to your experience and what you do. So, and I really like what you're saying about the communication part too. I think that's a great, that'd be a great area to kind of stress and to develop. So, thanks for explaining that to everyone.
No, no, thank you for giving me the opportunity.
Yes. So, hopefully you can still hear me on my end. The screen is sometimes cutting out a little bit. The sound is cutting out a tiny bit, but I think I can still hear okay. Can you still hear me?
Yeah, I hear you fine and I see you fine, except I do notice the screen cutting out. Hopefully, my screen is
Okay.
working good. I don't know.
Well, usually when it goes on YouTube, it's all right. Just sometimes it does it on this end. So,
Okay.
um, but anyway, I wanted to back up to talk about Atidot, and I hope I'm pronouncing that correctly now.
Yeah,
Um,
it's okay. Atidot. So,
Atidot.
perfect. You sound like an Israeli now.
Oh, perfect. All right, I got my accent down. Uh, so can you explain? This is a startup company, and can you explain what you do for the company and kind of how it got started?
Yeah, no, no, for sure. And let me start maybe. So Atidot is a Hebrew word. It's the plural of the word future, and we're predicting the futures for the life insurance industry. And the company actually was started in 2016, and it started operations in the United States in 2017. And let me talk maybe a little bit about the founders and their philosophy, and then we'll get more into what the company is doing now.
That would be
The
great.
founders included three people, Dror Barak and Asaf. And the first two, Dror and Barak, had their background from the Israeli army, the technology units. And many people have heard that the Israeli government was able to thwart terrorist attacks in like 30 different countries in 2017 because of the technology work that it does. And so
Wow.
this is the type of background that Dror and Asaf have, that Dror and Barak have. The third founder, Asaf, he was the chief actuary for the Israeli Ministry of Finance. And before that, he was an actuary at Swiss Re. So he has an industry background. And the idea is that if you just have a bunch of scientists who have excellent science, but don't have the business knowledge, you don't necessarily get a practical, grounded, real world result for the industry. On the other hand, if you have the scientists who really understand what to do with data, but you
Yes.
also have the real world domain of people who understand what's going on in the life insurance and annuity spaces, you could get practical, grounded answers for the industry. And this is our philosophy that, business people and technology people work together. We trained our models on life insurance and annuity data, so it's very specific to the industry. We work together in partnership with companies because the companies obviously know their business way better than we're ever going to know the business of a particular company. But what
Right.
we bring is the technology expertise that we could quickly ramp up for a company that either doesn't want to invest or that's made a certain amount of investment and needs some niche work done. We are a potential solution for them. Now, in terms of what we are doing for the industry, obviously any generalization is exactly that. So there's always more to it. But at a
Yes.
very high level, there are two things that we can do for the industry. One thing is to improve the customer experience. But by saying improving the customer experience, I don't just mean that the customer is happier or easier or whatever. I mean that the customer will buy more insurance and is more likely to stay with the company, either because the customer experience itself is better or because the company knows things about the customer that they may not have known previously, but
Okay.
because of the 600 plus variables that we could analyze for a company, they know a lot more. So this is
Wow,
one side. The
that's
other
interesting. So,
side, I'm sorry.
well, just to stop
Yeah,
you
for
real
sure, for
quick on
sure.
that
Go ahead.
note, I wanted to ask you, so are you doing a lot of the analytics then for these companies that come to you? Or are you mostly providing a software package that they then use and do the analytics?
So we're actually flexible in terms of the types of solutions that we provide.
Okay.
We could provide a solution in the cloud, but we also could provide a solution on a company's own platform. It really depends what the company is looking to do, the speed with which the company is looking to do it, the
Okay.
investment with which the company is willing to make. There's numerous considerations that we talk about.
That answers my question. Thank you. Yeah.
Perfect. So if
So,
it's okay, I'll get back to the second
yes. Okay.
broad
Continue.
thing that
Yeah.
we do. The second broad thing that we do is help companies with getting a better handle, and there's a number of ways to say it, but getting a better handle on their risk management. So let me give one example. We know that GE raised reserves on long term care insurance by $15 billion. And understandably, people have lots of questions. Is this the tip of the iceberg? Is this once and done? How's it going to affect other companies, et cetera, et
Sure.
cetera? Well, I mean, again, talking just perceptions, it is my perception that in the long-term care space, there's a need to figure out a way that while we give the benefits that have been promised to the customer, we also manage the costs because, just think of it from the customer's point of view. If companies don't manage the cost, is the company going to be around? And there have been examples of this. So it's important for companies to both pay the benefits, but also to manage the costs. Now,
Yes.
imagine, now when we think of the long-term care space, there are so many different options that someone who's in need of care can take. And some may be more cost efficient, some may be less. Some may help the customer get better quickly, some may help the customer get better slowly. If somebody could figure out using predictive analytics a way to help identify which customers need services and what type of approach is best for that customer, that might help the company, A, to provide benefits, B, to give an add on because the company is helping the customer decide what type of facility the customer needs, and C, if part of the equation, yes, part of the equation is what does the customer need, but part of the equation is what's most efficient. It might be solving a lot of this issue in one shot. So predictive analytics can be used for risk management also.
Yes. Oh, that's awesome. So, in terms of the predictive analytics side that you use, how do you apply predictive analytics for companies, and why is it important in the life insurance space, especially? Like, can you give? Because I think probably, especially those actuaries who haven't taken, there's a new predictive analytics
Yeah.
exam, and if they don't have a predictive analytics background, a lot of actuaries might be wondering, like, what is, and actually maybe start with that, what is predictive analytics and how is it different than maybe other forms of projections?
No. These are all excellent questions. So if it's okay, let me maybe answer the questions out of order, please.
Sure. I threw a few questions in there.
That's okay. Don't worry about it. Let me maybe give an example of where predictive analytics can be very, very useful. It'll be one very specific example, but it's an interesting thing.
Okay.
If you ask many people, including many actuaries, and I've actually done this myself, whether it's at SOA meetings or other professional meetings presenting, and I'll say, there's a certain date a month on a life insurance policy, certainly on a term or whole life, where the customer pays the premium payment date. And I
Mm-hmm.
ask the following question: what is the actuarial significance of the premium payment date? Or is it maybe just something the admin people need to worry about? The admin system needs to get right, but the premium payment date itself, maybe it doesn't really matter to the actuary. And I pause, I ask the question, pause, and very, very few people get the answer. Hopefully, now that I've been talking, more people get it. But one thing that we have found is that, especially in lower and middle income markets, the premium payment date has a very big impact on whether or not a customer will lapse. Because
Okay.
if the premium payment date is the day after the customer is paid, they might just pay the premium. If the premium payment date is much later in the month, they might have run out of money for that month and the policy lapses. So, in terms of, and you see, this gets to something that we find, we use both a company's, excuse me, internal data and we use external data. But even just with the internal data, we find insights that may not have been found by the company, because when you think of it, each of us in our heads, how many variables can we think of and hold at one time? But
Yeah.
again, the machine, like I may have mentioned earlier, is working with an excess of 600 variables. Now, in terms of your other question about what is predictive analytics, that's actually a wonderful question. And I'm thrilled that you asked that question, because one of the things that we find is that there seems to be some, I don't know what the right word is, whether it's confusion or questions about what's the difference between analytics and predictive analytics. And
Yeah.
people call, I put a spreadsheet together and I analyze whether more blue suits were sold or gray suits were sold. Well, that's analytics. I look at sales for the last 12 months, the last 5 years. I'm doing analytics.
Yes.
Where predictive analytics is different is there's a number of different ways. One way is that we're using machine learning. So you can't just put the spreadsheet together and do the analysis. The machine has actually been trained to do the analysis, and the machine is learning. And predictive analytics works when you have a specific problem that you want to solve. So, for
Yes.
example, my first year lapse rate is too high. What can I do to reduce my first year lapse rate? That's a great problem for predictive analytics, because we could come in and say, well, and I'm just making up potential solutions. I know that overall you have 20% first year lapse rate, but
Yes.
maybe it's a certain distribution system, or maybe it's certain customers who fit a certain profile, who maybe they have a 40 or 50% lapse rate, while everybody else only has a 10 or 15. And again, I'm just throwing out numbers that are not based on any
Right. It's just
reality. They're
just
just for
an
example.
example. Yeah.
But again, so this is what we do. We'll feed the data to the machine, make sure the machine is trained right, and it will identify the circumstances under which somebody will or won't lapse.
Okay.
So that's the idea.
So would you say that predictive analytics is more of helping to predict behavior as opposed to other types of items? Because there's been, you mentioned some of the confusion that's been out there. I've also heard a lot of confusion with the word predictive itself, because actuaries do a lot of projections and they mix projection with predictive. And they think, oh, I've done a projection, I've done some form of predictive analytics, which if you haven't studied predictive analytics, you may get the two confused. So would you say it's related to behavior and questions about behavior?
So again, and you're asking a few questions. So
I know.
let me try
I
to.
gotta I gotta stop. I gotta stop myself.
No. It's good. I appreciate it. It shows you're very engaged and really understand the material. So there's a few differences. You're 100% right that a major thing that predictive analytics does is predicts behavior. That's a major thing, and
Hmm.
we do a lot of that. Um, excuse me. When you think of what's going on with advanced underwriting or things like that, a lot of what's been done is also trying to mimic underwriters' decisions. So it is also studying what's the behavior that underwriters display
Okay.
in order to say preferred or standard. But if you take some of these things to the next level, Maybe it goes beyond behavior, and maybe it goes, well, can the machine underwrite the person by themselves and figure out what their likely course of health will be? Now, part of that is behavior, but part of that is knowing their history and knowing whether a certain type of event meant one thing, a different event meant a different thing. So
Okay.
it's not just behavior, but behavior is a major thing. Now, in
Okay.
terms of your question, you're 100% right that actuaries are doing predictions. We do, as actuaries, we do projections and we do predictions, and many actuarial predictions are very, very good. I know of one instance in which an actuary who was working with the company's dividends was reviewing the dividends paid each quarter in comparison to the dividend liability. And
Yes.
one quarter, the actuary was able to say with virtual certainty that there was an issue with the company's admin system because the dividend liability had been calculated in a precise way and the paid dividends were different. And the company actually caught the issue in real time. So that
Wow, that's interesting.
actuaries do very, very good projections many times. I'm aware of it. But what we're doing with predictive analytics is trying to build on what actuaries have done. And I'll give an example. Let's say when we do a mortality study. So we do a mortality study. We look at, let's say, the last 5 years of experience. And by looking at the last 5 years of experience, we say, okay, the person age 30 and duration 5 has this experience. The person issue age 30, duration 15 is this. The person issue age 30, duration 25 is that. And we could get a
Yes.
whole, excuse me, a whole select and ultimate table coming up out of all of it. Well, how do we know that the people who are buying today will have the same experience in 10, 15, 20, whatever years as the people who bought 10, 15, 20 years ago? And there's
Right.
actually two pieces to that question. One is just we all know about mortality improvement, trends in mortality. Maybe someone will cure heart disease, maybe someone will cure cancer. We all know that. But even taking it a step back, let's say, just for analysis purpose, that nothing changes in the medical profession's ability to help us and everything stays the same. Is it possible that I, as a company, am selling to different customers today than I sold to 10 or 20 years ago? And because I'm selling to different customers, the experience that I just have my perfect mortality study, and it shows me issue age 35, duration 20 has this mortality. But by the way, maybe the people who are today issue age 35, duration 20 were 60% in one category and 40% in another. And the people I'm selling to today, it's exactly the opposite, 40-60. And
Right.
therefore, I need to be breaking up my mortality. So predictive analytics can say, that's a great study, actuary, but maybe there's these additional breakdowns that you, as an actuary, want to be looking at, and it can enhance the accuracy of our projections and reduce the volatility around them.
And I think that is especially important in the life insurance area where you've got a lot of long-term mathematics going on. I mean, I think it's important in probably almost any field, but if you look at like the health field, for example, and you're pricing for just the next year, it's a lot different than when you're looking out 15, 30 years, like you're saying. So
And one thing I'm sorry.
well, that's it. I just think that can be predictive analytics can be especially valuable, I'm sure, in an area like life insurance.
And if I could add one thing, please.
Go for it. Yeah.
Thank you. So our work is primarily focused on life insurance and annuities. But what I'm doing for the ERM symposium, Enterprise Risk Management Symposium, is organizing a session on how predictive analytics can be used to improve enterprise risk management. And I'm looking to have, I'll talk for the life side, and to have a health and P&C actuary talk about how they're finding improvement from predictive analytics. And like I was just talking to, I just recruited the health person yesterday, and she gave me a bunch of examples. But like one example of where predictive analytics could be used for health is we
Awesome.
all hear that there's lots of fraud in health claims. Can you
Correct.
identify the behaviors that say that looks like fraud? So
Yes.
it is, I've been focusing on life and annuities, but there is what to do for the other fields also.
That's great. I think that's really important. I mean, I'm glad you bring up that example of fraud. I mean, that's a perfect example in the health space. I mean, especially in Medicare, there's just the amount of fraud per year. I don't know what the number is, but I think it's maybe billions per year in fraud. And so being able to, kind of stop some of that or to predict it that'd be amazing. And I'm sure there's a ton of other examples. So
Yeah, no.
yeah.
That's there are.
Yeah. So we're getting up to 45 minutes here, so I'm gonna ask you just a couple more questions before we wrap this up.
Perfect.
I want you mentioned when we had talked before that either you're working on or possibly have completed a publication. Did you want to say anything about that?
Oh, so I've worked. I mean, I've published bunches of articles, and what I could share is that the most recent article that I wrote was actually published by the Australian Institute of Actuaries, because this has international applications. And I'm doing a lot of speaking. And I actually, what I would add is that I started my own blog post, Martin's Analytics. So anyone who wants to
Awesome.
read what I'm publishing certainly can go there or look on LinkedIn.
Yeah, and if
But
you want to send me a link, I'll post it below in the YouTube video.
oh, thank you. Definitely, I
Yeah.
will.
Yeah. Awesome. And all right, so I like to end these with two fun questions for actuaries. I'm sure that it sounds like you've done a lot of traveling, especially for your job. And I don't know if you've done traveling for fun as well, but what is your favorite place that you have visited?
That's actually, I'll tell you, a very, very hard question, because I've been as far west as Hawaii and as far east as Israel.
Okay,
And
wow.
to pick, and I've been lots of different places in between. I mean, the way I see it, every place I go to has strengths, and there are very nice things about a lot of places. And, there's always things that are, hey, I wish I was back home. I
Of
mean,
course.
the weather in Hawaii is unbelievable.
Yes.
So that would be a big plus there. The climate in Israel is much warmer than it is here. There are great, great people to meet. I mean, I've been in Iowa. We met great people. There's great people all over this country. So what I like more is the travel experience and getting to meet new people.
That's awesome. That was a very actuarial answer to my question. There's positives and negatives to both.
Yep, yep. Well, you're talking one actuary to
that
another.
that is true. That is true. I like it though. So now, second question is, what is your favorite hobby outside of work?
Spending time with my family.
Awesome. And you have a few kids, or?
Yeah, we have 5 kids. Some of them are
Oh wow,
grown.
big
Some of
family.
them are in. The youngest is in college.
Awesome. So there you have it. This I really appreciate you joining, Martin Snow. This was an interesting interview, and I'm sure we could go on for hours. So we'll cut it short here. But anyone that is interested more in his work, we'll post Martin's blog below, and also keep him in mind for his run for the SOA board, because I think he brings a real depth of experience. So I appreciate you joining.
Yeah, and thank you, Paul, for inviting me. I really have enjoyed talking with you. Thank you very much.
I've enjoyed it as well. And I'm out from Spokane, Washington, and Martin is out from, where are you on the East Coast again?
Jersey, New Jersey.
New Jersey. Martin is out from New Jersey, and we will talk to you next time.
Be well.
You as well.